Good evening, everyone. Thank you so much for joining our session. We are going to wait for a few minutes to let more people come in, and then we're going to officially start. Good evening, everyone. Again, I welcome you all to our webinar on behalf of Bestax Chartered Accountants. As we all know, we are going to be talking about corporate tax and all of its related aspects. But before that, I would like to introduce ourselves briefly. We are Bestax Chartered Accountants located at Business Bay, Dubai. We are a leading finance consultancy and corporate consultancy firm offering a variety of services that you can now see on your screen as well. And I will tell you that at all times you will be able to see our contact information on your screen in case you have any queries or concerns further. We will be talking about corporate tax, and I will introduce you to our team that is in our session. We have Mr. Farhan, who is a tax consultant who has assisted us in the materials, and he will be assisting us in our Q&A session. And then it is myself, Maham. I'm also a tax consultant, and I will be briefing you guys about the webinar. And then we have our key speaker, Mr. Haseeb, who is our manager taxation, who will be explaining all the complexities and about the regimes. This is our agenda for the webinar. Again, we will be touching base with the corporate tax and all of its key aspects. We will be talking about the requirements that are there to be compliant to the tax, and then the main aspects, which is transfer pricing. At the end of the session, we are going to take question answers. We'll start with the frequently asked questions and queries that we have received already, and then we will take live questions if there will be any. Please keep in mind, since this is a 45-minute session, we're going to just touch base with the topic. And then in the coming weeks, we're going to hold the detailed webinars in all the relating aspects and topics. And I would also like to point it out here that the information in this webinar is based on the consultation document that was released by FTA on 28th April. Further details are yet to be released by FTA, and those details, they may or may not deviate from the information that we are currently working on. So starting on the corporate tax, I will briefly give introduction, even though by now we all are aware of the regime. It was introduced at the start of this year on 31st January by UAE Tax Authority. They introduced it and made the announcement, and at the same time released an FAQ document that addressed all the preliminary queries and concerns. And then later on in the year, like I said, on 28th April, they released the UAE Ministry of Finance. They released a public consultation document after having a detailed discussion with all the concerned stakeholders and taking into their concerns up till 19th May 2022. And after that, this consultation document was released. So when we talk about corporate tax, it is a direct tax that was introduced by UAE, after which it became the fourth out of six Gulf countries to have corporate tax. And when we talk about threshold, it is at a threshold of 375,000 your income. Up to 375,000, it is taxable at 0%, and any income that is above 375,000, it is taxable at a rate of 9%, which is still the most competitive rate worldwide, making UAE still the most attractive land for investment opportunities. So, talking about the calculation of the taxable income, we're going to touch base with that briefly. It is calculated on the accounting net profit and loss of the company, and the set of records will be the same that the business has prepared, that are going to be in compliance with the financial reporting standards that are accepted internationally, so that a business does not have to prepare a separate set of records for corporate tax. And again, all the statements that are going to be prepared, they will be in compliance with the IFRS. And when we talk about the tax period, when we talk about the tax period, it will be the same as the financial period of the business. And in the absence of that, the tax period will be the default calendar year, that is January to December. So this is a brief introduction as to what corporate tax is before we delve into further details. I'm going to now hand it over to Mr. Haseeb, who is going to discuss in detail the aspects of the corporate tax. Over to you, Mr. Haseeb.
Good afternoon, everyone. This is Haseeb Hamdani here with you. Thank you so much, Maham, for giving us a brief introduction about corporate tax and how it was implemented. Now, I will further take this session, and now we will be talking about some basics of corporate tax. As Maham had already mentioned that the corporate tax is a direct tax which applies on the accounting profits of the company. Now we are going to further discuss about the scope of the corporate tax, which companies or the legal persons come under the scope. So briefly saying, generally saying, corporate tax applies to all the entities who will be conducting or who are conducting business in UAE. So there will be entities who may have companies registered in UAE, or maybe foreign entities who are doing their business in UAE. So entities in UAE, maybe they have their own trading license, unincorporated partnerships. So if they are conducting their businesses registered in any authorities in UAE, they will fall under the scope of corporate tax. If there is a foreign entity who is managing its operations from UAE, those will also be come under this regime of corporate tax. Then there are foreign legal entities which may be driving their income. Maybe they don't have registered companies in UAE, but maybe they are somehow making, maybe they have customers in UAE, maybe they have some contracts in UAE. They don't have any registered companies, but if their source of income is UAE, then those companies would also need to register with UAE corporate tax and will need to be registered for that purpose. Further, as I have mentioned, that permanent place of establishment will determine whether a person or a company will be subject to UAE corporate tax. Now, what is permanent establishment? This is as per the rules of OECD. This defines that whether a company will have a fixed place of business, maybe an office, or maybe they have a dependent agent. What does it mean by dependent agent? For example, a company, they don't have any office in UAE, but maybe they have some representative through which they are conducting their business. Maybe they are sending their directors in UAE or in some business meetings. If it is going frequently and the contracts are of material amount, so those dependent agents will also constitute towards permanent establishment for that business. So such companies will also fall under the scope of UAE tax, corporate tax. Now, as we have already talked about taxable persons and the taxable income, we know that the taxable persons will be subject to corporate tax. However, there are some companies and some incomes which are exempt from UAE corporate tax. This is to benefit those companies. Now, I would like to first point out that dividends and capital gains, this will not be subject to UAE corporate tax. For example, if there is a company, it has a subsidiary in UAE, and it is driving dividends, driving profits from that company, it will be an exempt income for the UAE company. The condition here is, for example, there's a company A and it has a subsidiary B. The subsidiary B income and the dividends that it will be giving to company A will be exempt, provided that company A's minimum shareholding in company B is 5%, and also that company B, maybe if it is, let's say, situated in another country where corporate tax is already there, that corporate tax needs to be at least 9%. So let's say, if we take an example, there's an XYZ LLC UAE company, and it has a subsidiary company in, let's say, Switzerland. If there is a tax, of course, we know that there's a tax in Switzerland that is, of course, more than 9%. If that company, that subsidiary company is already being taxed at least 9% in foreign country, then those companies' profits will not be taxed again. This is to avoid double taxation. Now, we have talked about subsidiaries. The foreign branches profits will also be exempt. So branch and subsidiary, these two are different. They are different. So foreign branches means that a company has a branch in any other country, so the branches are not considered separate for tax purposes. Subsidiaries are a separate entity; they have their own separate legal structure, and UAE company may or may not have some shares in those companies. So foreign branch profits are also exempt, provided that the branch, let's say if it is to be talked about Switzerland, so the profits will be taxed. The branch profit will be taxed, already taxed in Switzerland, so they will not be taxed again in UAE. So UAE parent company or the main company will pay tax only on the income which is being generated in UAE. Then this one, because we all know that UAE is a logistics hub, provided that the income generated from aircrafts and ships related to international transportation, that will also be exempt. For example, there is some non-residents in UAE. They are generating. They have their ships. They are, for example, ships and their other vehicles being used for international transportation. Those will also be considered exempt, provided that that non-resident, wherever that non-resident company is situated, they also do this. They also have this reciprocal arrangement with UAE. They are also doing it exempt. So now we will briefly talk about unrealized gains and losses. Unrealized gains, we all know that, or maybe some of the accounting background people would understand that, for example, if we have purchased an asset, let's say a land worth of 100,000 dirhams, and we purchased it, let's say in 2018, in 2020, the land value or the property value appreciated to 120,000, the market value. We did not sell it, but the market value has appreciated. This is an unrealized gain because the property has not yet been sold. So on these unrealized gains, if such gains are in capital in nature, it will be non-taxable. For example, what is meant by capital? Capital means the fixed assets, properties, machineries, the equipments. So these will not be taxed. These will not constitute towards taxable income. However, if such gains are being uh, are arising on regular or revenue gains are, for example, we purchase inventory and that inventory has appreciated over the period of time, that will constitute towards revenue gain. Any income, whether it is realized or unrealized, that will be constitute towards taxable income. And of course, if you have taxable income more, you will also have to pay corporate tax, that is 9%. Now, to briefly differentiate about realized and unrealized gains or losses. Unrealized gains or losses, I've mentioned already that which have maybe occurred as per the market conditions, but since the company is still holding that property or liability, it will not constitute towards unrealized. It will not be taxed. It goes for example, if we have some, let's say, foreign currencies, maybe pounds. Dollar is, of course, fixed with dirhams, but let's say if we have any other currency, let's say pounds or any other currency, and the value has appreciated, it will not it will not, of course, be a realized income. It will be an unrealized gain. Since it is a revenue in nature, revenue gains and losses, it will constitute towards corporate tax. We all know that Ms. Maham, she's already explained that corporate tax is calculated on accounting profits, which means that you have sales, then you have expenses, and whatever profit is left, corporate tax is calculated on those profits. Now, of course, if we have more expenses, deductible expenses, we have lesser profits, which means that we will have to pay lesser corporate tax on the same. Now, FTA has proposed some of the expenses which are limited in, which means that some expenses we cannot subtract from our sales. So these will be called as deductible expenses, which are deducted from the taxable income. And there is some limitation on those deductible expenses. First of all, this is interest expense. Since we all know that this corporate tax is introduced, it is the only tax other than VAT and excise, of course. There is no personal tax. So it is expected that maybe some companies will try to maybe give more salaries to directors, the management, maybe in terms of salaries as well as interest expense as well. So there could be some scenarios. For example, an owner of the company is making an investment of 100,000 and he's saying that there is the interest of, let's say, 10%. That interest is definitely company's expense. Now, FTA has proposed, since there is no personal tax, to avoid abuse of uh, these expenses, FTA has limited, is expected to limit that up to 30% of adjusted earnings before interest, tax, depreciation, and amortization. So the interest is capped at 30% of total. So we cannot, whatever the total earnings before interest, tax, and depreciation and amortization is, it will be 30% of that. The entertainment expenses, uh, these will not be claimed in 100%. This is due to the fact that, for example, if we are entertaining our clients or employees, those entertainment meals and entertainment expenses, only up to 50% of those expenses will be allowed to claim. This is because all the entertainment expenses have some personal element as well. So only up to 50% of those entertainment expenses will be allowed. Administrative penalties, for example, for VAT, a company is paying some penalties. Those penalties will not be counted towards deductible expenses. Input VAT that, of course, we will be claiming back, that will also be not allowed as deductible expenses. Donations paid to unapproved charity organizations will also be non-deductible expenses. If you are paying any donations to an approved charity in UAE, of course, UAE is going to has already some approved charity organizations in UAE. If the charity is being done to those organizations, we can deduct it from our taxable income and lower our corporate tax. Now we have been receiving multiple questions and queries from our clients, specifically about free zone. So we have a good news in here that although this corporate tax applies to all the entities in UAE, the free zone companies still enjoy certain benefits related to corporate tax, and they will be paying corporate tax at 0%. But let me clarify it that they will still be required to register for corporate tax and do their corporate tax filing. But if they are doing their business only in free zone, they will not be taxed at standard rate of 9%. So for example, if they are doing transactions as a free zone company, let's say PMCC or any other, let's say Jobs, free zone company, they are doing transactions outside UAE, this will not be taxed. If they are doing transactions within free zones, that will also not be taxed. If a UAE, a free zone company have a branch in mainland, then in that case, the income related to that branch will not be taxed. So the income related to that branch that is operating in mainland, it will be taxed at 9%. However, free zone companies' income will not be taxed. So if we have a passive income, for example, it is a free zone company, it has a branch, let's say a subsidiary company in mainland, any income, capital gains, let's say dividends or profits being transferred to free zone company, though that income will not be taxed, provided that is only passive in nature. What is meant by passive? Passive means that is not your regular course of business. For example, if you are, let's say, selling cosmetic items, that income should from mainland should not be related to cosmetic items, but that income is maybe you have another company in mainland and you are only getting dividends from that company. Same goes for the group companies as well. If you have a free zone company, then you have a group companies, let's say in mainland, the income related to mainland will be taxed, but for free zone it will be tax at 0%. However, if you are selling some, making some transaction in mainland, even let's say a small portion of it, or you will lose this exemption status and you will have to pay on the entire. So free zone companies who are doing some business in free zone as well as in the mainland, maybe with this corporate tax coming in, maybe they will have to structure in something, maybe they will have to separate two different legal entities for their mainland business and for their free zone business, because free zone company will be able to enjoy the 0% corporate tax rate only if that income has no portion of mainland activities. Also, maybe a free zone company is, let's say, selling some goods to mainland company, free zone company selling some goods to mainland companies. Maybe it is importing from, let's say, Germany, some goods and importing into UAE. That income can also constitute towards 0% corporate tax, provided that the goods that are being imported by UAE mainland company. So, for example, there's an ABC free zone company, and they have a customer XYZ in mainland Dubai. That free zone company is making a transaction and arranging some goods to be sold to UAE mainland company, but those goods are, let's say, being imported from Germany to Dubai. Those goods, if those goods are being imported by UAE mainland company itself, then that will not constitute towards the applicability of corporate tax. But if the free zone company is first importing those goods and then selling it to mainland, it will come under the scope of corporate tax, and of course, free zone company will have to pay tax on those goods. So as I already mentioned, if there is any other mainland sourced income, the free zone company will lose its status as a 0% or exempt. It will have to pay taxes on its entire profits. Also, there's some more developments with regards to audited financial statements. Although some of the free zones, they had already mandated to provide annual audited financial statements, but there were some free zones, let's say IFZA or Shams and Rakesh, maybe it was not mandatory to provide financial statements. However, it will now become mandatory to provide annual financial statements. I hope it clarifies many questions related to free zone. To summarize, I will just say that free zone companies will still enjoy the benefits of 0% corporate tax, provided that they don't conduct business in UAE mainland. All their business is done in free zone or outside UAE. Now, this is very important topic in UAE corporate tax, that is transfer pricing. Because with any country who has corporate tax, there is the transfer pricing implications is always there. Transfer pricing means that if two companies are dealing with each other, but they are related parties, maybe their party A is providing services to party B. These transactions need to be at arm's length as per instructions from OECD. So that is the concept of transfer pricing, that all the transactions with related parties, it needs to be at market value. It needs not to be, because to avoid shifting of profits. For example, there are some countries where there is no tax, like UAE itself. So some companies, what they would do, they would just transfer their profits to UAE because there was no tax. To avoid this base erosion of profits, this transfer pricing rules will need to be determined. So if there is any transaction between related parties, that needs to be properly documented. Master file, local file, there are some other requirements that needs to be maintained. So let's say if you have a company in UAE, then you have another company, let's say Mauritius. The transaction, if you are having, let's say, maybe providing some services to that company or receiving some services from your foreign related party, you need to retain proper documents. Now, what is meant by the connected persons, the related parties? These are, of course, we have already discussed about that. These are the related parties who are somehow related to each other. For example, there's an owner, the same owner also has another company, or there's a company, the same company is a parent company of maybe 2, 3 other companies. So that will constitute towards as a connected persons. So the services or payments being made to connected persons or related parties need to follow transfer pricing rules, which means that it should corresponds to the market value, and it should be wholly for the purpose of business. It should not be to shift profits from a high paying tax country to a lower paying tax country. Uh, of course, as we have seen some tax groups in VAT, there will also be tax groups in corporate tax as well, which means that a group of companies who are related to each other, they may form one tax group. They will have a representative who will be responsible for the entire groups. There will be single VAT, there will be single corporate tax return that will be submitted in 1 year. And also the intra-group transactions, this will be eliminated. If the companies need to maybe join a group, form a tax group, of course they will need to make some application to FTA, a written application. The member companies will authorize the representative company that they are willing to join that tax group. And if a tax group is already formed, a new subsidiary or connected person may also join the tax group, and they will follow the same process. So, guys, this was it. I know it was a very brief session because we just wanted to have a brief understanding of corporate tax. We understood the transfer pricing briefly, group tax groups, and deductible and non-deductible expenses, and how corporate tax will apply to different companies. We will have definitely some detailed topics because corporate tax is very vast. So we will be having some detailed sessions on this one as well. Now I will hand over to my colleague Maham. We have some FAQs which we received while participants made their registration. So we will be answering those, and then we will have some live questions as well, which we had received. We will be answering those questions as well. Okay, over to you, Maham.
Thank you so much, Mr. Haseeb, for such a great session. I hope we all got to learn a lot about the corporate tax. Like I mentioned earlier, we are going to start with our frequently asked questions that we received in our webinar registration process. And in the meantime, if you guys want, you guys can type in your questions as well. Or if you would like to ask the question directly, you can raise hand and we will allow you to ask the questions. So among the many queries that we received, the one that was asked a lot was how are we going to forecast the incoming year? How are we going to look at the year 2023 now that corporate tax is also included here?
Of course, Maham, with corporate tax, there will be some compliance requirements. The companies need to prepare their accounting records in a proper manner. Although some companies they were already having these accounting and audited requirements. But with this corporate tax being introduced, they need to have a proper set of records, especially their accounting records. It needs to be as per international accounting standards.
All right. And then one more query that we received was that now that there is corporate tax introduced, how are we going to look at it from audit's perspective? Will audit become a must for every company?
For free-zone companies, as I've already mentioned, yes, it is expected that audit will be mandatory for free-zone companies as well as for mainland companies. But there are it is still expected to be announced. FTA will maybe in coming month they will be publishing the final law. The things will be more clearer with regards to audit in the.
Perfect. And then, even though we have briefly touched on this topic, but there were a lot of questions. So one thing that was asked a lot is that how is it going to get implemented in the business, actions? Is there a minimum threshold? How are we going to pay the corporate tax?
The minimum threshold for corporate tax is 375,000. This is to support the small businesses. So, for example, there's a business who has an income of 375,000. They will not need to pay any corporate tax. So they will still need to submit the corporate tax return, but they will not be paying. So, only the profits over and above 375,000 will be taxed at 9%. So, for example, there is a company who has profits of 400,000. So, up to 375,000, it will be 0%. Over and above, let's say 25,000 in this example, will be taxed at 9%.
Right, and now coming to the questions that we're receiving during the session, we've got one here that says that there is minimum 5% shareholding criteria for dividend income being regarded as exempt income. Can we briefly touch on that as well, please?
So that 5% criteria is basically for the subsidiaries, foreign subsidiaries. So, for example, if you have a company, let's say in England, and you are a UAE-based company, then you have a subsidiary in England. Those foreign subsidiaries' income will be exempt. You can claim exemption for that, provided that it is being taxed at least 9% in the respective country, and also your minimum shareholding in that foreign company should be 5%. So that is related to the foreign subsidiaries and claiming exemptions on the profits of the.
All right. And then there is one more that what is the applicability of corporate tax on profits from January to June 2023?
The corporate tax will be applicable on the financial year starting after June 2023. So, for example, if your year end is 31st December 2023, then your first corporate tax year will be January 2024 to December 2024. So your profits, since the corporate tax will not be applicable to you, your profits from June 2023 to December 2023 will not be taxable. So, for example, if there is a company whose financial year end is starting from June 2023, corporate tax will apply to such companies.
All right. And if we could also briefly discuss about the research and development expenses, we've got a query about that as well.
Research and development expenses, of course, if those are related to the business, and I am considering that, I'm assuming that those will definitely be related to business, then definitely, yes, that can be constituted towards a deductible expenses and reduce the corporate tax level.
And there's one more about the realized capital gains, if it is going to be taxable or not.
Realized capital gains will definitely be taxable. We have already touched this in our session as well. Only the unrealized capital gains that will be non-taxable until it is realized.
Right. And since there were a lot of questions about the implemented corporate tax in free zone companies, so that we can touch base with that, please.
Maham, as I have explained about prison companies, so briefly saying that the prison companies will not be liable for corporate tax, although they will need to register, they will need to do all the compliance requirements for corporate tax, but they will not be paying any corporate tax on their on their free zone income until or unless they are doing some business in mainland. So what I would suggest for companies who are free zone companies especially, not to indulge in UAE mainland business, not even a single business transaction if they want to, of course, enjoy 0% corporate tax benefits.
Right. And then we've got a few questions regarding the salaries of the management and salaries of the CEO. How, if there's any threshold in regards to that as well when it comes to corporate tax.
No, as of now, there is no threshold or limit as how much salaries CEOs and MDs can withdraw. However, since there is no personal tax, I believe that FTA may introduce some limitations. How much salary? Of course, it needs to be a reasonable at market as per the market standards. If a company is, let's say, is making hundred thousands of profits, you cannot put all those in the CEOs and MD salaries. But yes, there is no limit as of now. But to avoid abuse of this salaries element related to MD, FTA may introduce some limits in the future. But as of now, no.
All right, thank you so much, Mr. Haseeb. And I would like to thank all the attendees who have attended our webinar. We are running short on time. Thank you so much for your questions. I know there are a few questions that we could not take, but this is just the beginning. We are going to hold further webinars as well in the near future, where we will be having a lot of discussions in detail about all the topics. I would like to mention here that all the attendees of the webinar, they will be receiving a PDF of this webinar from our end in their emails, and you guys will be receiving a thank you email from our end as well. I would like to thank everyone once again. Thank you so much for taking time out for this, and I hope we all get to learn something. I hope you all have a great rest of your day. Bye bye.